Hello everyone. Once again, I am with the chapter called Money and Credit for Class 9. Welcome, I welcome you all in my YouTube video that I am sharing since 5 months for you all, so that at home, while sitting at home, you can get, or your studies must go on, and you can get help in the subject of economics through my video lecture. So today I'm going to explain. In my previous video I explained about that what is credit and why people need credit for their various economic activities. That I discussed with you all, that credit is a situation or it is an agreement between the lender and the borrower, in which the lender supplies or provides money and other products or any other thing which is asked by the borrower to fulfill their various needs, and in the promise of making or promise of paying it or returning it in future. So credit is an agreement between the lender and the borrower, and banks play a very important role in providing credit and meeting the various needs, growing needs of the customers or the borrowers. So in this way, here I am going to explain that what are the different credit situations, because sometimes credit plays a positive role and it helps those borrowers to increase his income and make more money and make their life able or add comforts in their life. And in other case, we will discuss about in which credit plays a negative role or played a negative role, and it has not helped the borrower, but the borrower lost even the resources or even the source of income that they were having. Means credit has not helped in the second situation. So here two situations are given here, which we are going to discuss in the chapter. So we know that there is a huge demand for credit everywhere, and in cities or in villages. And why people want to get or take credit or loan? Because of their various increasing economic activities and needs, and everyone is trying to make their life better, and this betterment or this better things or betterment or improvement will happen not with their income, because the salary or the income that they bring or that they get from their work or workplace or the engagement is not unlimited, it is limited. That is why they have to take credit or go to the formal and informal sources of credit. That I'm also going to discuss in my next video, ki what are the formal and informal. And I think I have explained in brief that what are the formal sources and what are the informal sources of credit. So there is a huge demand for credit for meeting various or increasing needs of the people. And we know that banks play a very important role in providing us the credit, because what we see in cities, people, most of the people in living in cities, they depend or they go to formal sources of credit because they are educated, they have the particulars or the things or requirements which the formal sector asks or with the formal sector requires. But what we see in villages, still people depend on informal sources, which includes money lenders, sahukars, employers, etc., friends, relatives, where there is no one or no organization to supervise their functioning, to keep an eye whom they are giving credit and what is the rate of interest that they are charging from the borrowers. So in this way, but informal sources, which includes banks and cooperative and other government financial institution, in which there is RBI to control the functioning and the activities of the banks and other financial institutions, and RBI keep an eye on the activities of these banks, and bank has to maintain a record that RBI verifies quarterly, half yearly, and yearly. So, in this way, a large number of transactions in our day to day life activities, it involves credit. Means, due to credit, a large number of activities and the growing demands of the people are met. So, credit is very important, or it is playing a very important role in everybody's life. Credit or loan, it is an agreement between the lender and the borrower, who is supplied by the lender money, goods, or services in return or in promise of future payment. So, two situations that I am going to discuss. One is festival season, and other one is agriculture, for agriculture purposes. So, in festival season, what we see that the manufacturer has to deliver order, because he has got an order to deliver more than 3,000 pairs of shoes in a month. But the production, and to complete the production on time, the manufacturer has to hire more workers for stitching and doing all the other type of work to produce or to deliver the shoes after 1 month. To meet these expenses, what he does, the manufacturer hire a few more workers, and he has to purchase the raw material also to deliver 3,000 pairs of shoes after 1 month. So, to meet the expenses, he obtains or he gets loan from two sources. First, he asks the leather supplier to supply leather and promises him to pay later after the delivery. Second, he obtains loans in cash from the large trader who has given him the order, advance payment, and got advance payment from the trader of 1,000 pairs of shoes, because he has to deliver 3,000. So now what he did, he took advance payment of 1,000 pair of shoes, and 2,000 pair he will get after the delivery. So in this way, he has become able to meet the requirement and the input or the other cost of the shoe manufacturing. So by the end of the month, he becomes able to deliver the shoes, 3,000 pair of shoes after 1 month. And at the end of the month, the manufacturer is able to deliver the order, and he made a good profit in these process. And he has become able also to repay the money that he had borrowed from the trader, or has to give the money to the supplier of leather also, who has given him advance inputs. So in this case, what we saw, that the manufacturer Salim, whose name is Salim, he has got credit, or he has taken credit or loan to meet the working capital. Working capital means he hired the workers, he bought the extra inputs, leather, etc., which he needed in the production. In this way, the credit helped him to meet the ongoing expenses of production. Complete production on time, and thereby increased his earning. So credit played a vital and positive role in Salim's case. Now second case is Swapna's problem. That now I am going to explain that how, for agriculture purpose, a small farmer Sapna, she has to go for the credit or to take loan. She takes a loan from the money lender to meet the expenses or the inputs for the productions that she wanted to do on her small farm. Midway through the season, the crop is hit by the pest, and for we know that for any agriculture purpose, if a farmer gets a loan, he promises to repay after the harvest. So here also Sapna promised that she will repay the loan after the harvest of the crop. So but midway through the season the crop is hit by pests and the crop fails, and she could not become able to repay the loan in time, and however she sprayed costly pesticides but it did not work, and she is now unable to repay the money lender, and the debt or the loan amount it grew because of the higher interest that was charged by the money lender. So next year Sapna takes another loan for cultivation of crop, and this time she is not having a bumper crop, it is a normal harvest this year. So now but she has to repay the previous loan as well as the present loan. So she has to sell a part of her land to meet the or to repay the loan or pay off the debt, but still she is not able to pay the previous loan as well as the present loan. So what we see in rural areas, that the main credit, that means main demand for credit is only for crop production, because we know that more than 60% of the village population they do farming, or they work as farm laborers. So crop production involves considerable cost, means too many cost they have to spend on buying seeds, fertilizers, pesticides, water, electricity, repair of equipment, etc. So there is a minimum stretch of 3 to 4 months they get to between the time and the farmers buy these inputs when they sell the crops. So farmer usually take crop loans at the beginning of the season. So at the beginning of the season when they were sowing or when they are supposed to sow the crops, that time they need to buy all these inputs. So they take loan at the beginning of the crop season and promise to repay it after the harvest. And repayment of loan is dependent, or it depends on the income from farming. It depends on the harvest, what type of harvest they will have. So in Sapna's case what we see, that the failure of the crop made her unable to repay the loan after the harvest, and because she could not get the expected result from the cultivation. So instead of helping credit here, instead of helping Sapna, it is an example where it has not improved her situation, and this is an example of what we call debt trap. Sapna's previous loan as well as his present loan. So credit in this case pushes her into a debt trap in a situation where the recovery of the borrower is very painful. So in this way what we have learned, that credit helps to increase the earning in the first case. In festival season the manufacturer he becomes able and he earned a lot, and that made his situation better. But in the second case of Sapna, what we saw, that due to crop failure credit pushes her or pushed her into a debt trap, and she could not repay the loan on time, and she has to sell the small portion of her land also. So in this way what we have seen that the situation has not improved but it has deteriorated, or her situation is now become worse off than before. Means she was not having this situation before, but credit, so there is a lot of risk in the situation where there is some support in case of loss. So in next class I will discuss some more cases with you all, that what are the terms of credit on which the borrower gets a loan, etc. Thank you.